So there has been a lot of discussion that what's the impact of GST, rate reductions on the growth outlook. And there is one sector which is the auto sector where the GST pass through has been full, where basically the auto companies have passed on the full benefits of GST cuts to the consumers. And one of the ways to look at the effect of GST, because the GST cuts, or the at least the intention to cut GST was announced on 15th of August during the Independence Day speech by the Honorable PM. There was a slight waiting period by customers where they waited for the actual GST rate cuts, before doing any purchases. So broadly, from a period of 15th of August till the 22nd September, till the GST rates were actually announced, there was very little pickup in purchases. And broadly from 22nd September was when the purchasing started to happening. So what we have done is we have taken a period from 1st of August till 31st of October, which will kind of, and we have compared the year-on-year data, which will kind of reflect the total impact of the GST rate cuts on the, buying by consumers. And if you look at the chart on the right-hand side, overall, we are seeing a very sanguine picture of, rural demand. So if you look at two-wheeler sales, they are up 26% on a very high base of 13.5%. If you look at tractor sales also, they are up about 17% although on a small base of 0.9%. And car sales continue to remain strong. I mean, they're up about 8%. So broadly, we are seeing some pickup in consumption wherever we are seeing pass through of GST cut, benefits. If you look at the IIP numbers also, IIP number was also quite strong, where we saw that IIP grew by 4% in September compared to 4.1% in the month of August. Although at a headline level, it's a slight decline, but we have to keep in mind that mining, which has a reasonable weight in IIP, actually saw a decline in the month of September, where mining fell from 6.6% in August to minus 0.4% in September, because there were some sections in India, especially on the eastern side, where we saw excess rainfall and mining operations were affected in those regions. And that's why we saw some slowdown in the mining. So we do expect mining to pick up in subsequent months. But if you look at the manufacturing sector behaved quite well, where it grew from 3.8 to 4.8%. If you look at the use-based, categorization as well, if you look at consumer durables went from 3.5% to 10.2%, which shows, expectations of strong consumption spending and broadly manufacturing firms, raising production of durable firms in anticipation of that demand. If you look at the infrastructure or, construction goods as well, that also continue to remain in double digits. So infrastructure, goods grew from 10.4% in the month of August to 10.5% on good government spending. So broadly, government spending continues to remain strong. Consumer durables also remain strong. On the consumer non-durables, which was expected, because the consumer non-durables are largely not affected by either interest rate cuts too much or GST cuts as well, because largely they are essentials. Uh, they continue to be in contractionary territory, but if you look at the delta from the month of August, that also shows a lot of improvement, where consumer non-durables have reduced their growth, negative growth from minus 6.4% to minus 2.9% for the month of September. So broadly, the positive step taken by the government of GST rationalization is showing, at least in the initial phases, very optimistic demand outlook from most of the sectors. So we do expect growth outlook for this quarter, which is the October to December quarter, also to remain quite on the stronger side, which also from a rate perspective leads us to believe that there is not too much space of policy easing from the RBI.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.